I was in a national meeting, and Mark Bertolini, who now runs Aetna, was in the meeting. He was working for Cigna at the time. And he was explaining to us that he thought Cigna was a little too physician friendly and that it was time to execute a few hostages. That he
Literally, those were the words he
those
used?
were his words. And I had to go back and terminate 150 out of my 15,000 physicians just because we were going to execute hostages. And I thought, this is just the wrong way to approach something as important as healthcare.
Wow.
Healthcare providers are experiencing a massive financial strain brought on by big health insurers. That's why we are embarking on a journey to unravel the complexities, challenge the status quo, and find solutions to economic challenges that have been plaguing physicians, hospitals, and others for far too long. Welcome to The Strain, winning the battle with big health insurance.
Welcome to The Strain, winning the battle with big health insurance. I'm Elliot Listman. With me is Jim Blakeman. Today's guest is Ron Howrigon, the president and CEO of Fulcrum Strategies, a healthcare consulting firm specializing in payer contract negotiations for physician groups. Since 2004, he's been at the forefront of providing consulting advice to thousands of physicians across the country. In addition, Ron is also a published author, sharing his insights in books Flatlining and Clear, Reforming Healthcare to Save the U.S. Economy. We're thrilled to have Ron with us today. Welcome, Ron.
Thank you. It's great to be here.
I was hoping you could kind of kick this off a little bit and tell us the story of how you got to start this specialized consulting practice. Where'd you come from? What motivated you?
Sure, absolutely. So I started my career working for the payers, actually negotiating contracts against physicians and hospitals. I did that for 18 years, working for various insurance companies, Blue Cross, Kaiser, Cigna, and different parts of the country. And, after about 18 years of that, I was starting to get a little disillusioned at what I was doing to the delivery of healthcare, who I was working for. I was in Pennsylvania working for a Blue Cross plan. My wife was pregnant with our second child. I had cut the reimbursement for the obstetric network a few weeks before the delivery, much to my wife's chagrin. And that the night of my son's delivery, we had a C-section, and I was holding a beautiful baby boy, and I was thanking every doctor in the room, the anesthesiologist, the obstetrician, et cetera. And they did what doctors do every day. They kind of blew it off and said, hey, it's all part of the job. I'm glad everything worked out. They didn't really take a bow or take credit for what they had just done. And as the obstetrician was leaving the OR, he turned around and he said, you know what, Ron? The next time you take money out of a doctor's pocket, you remember tonight, because I'm the one who was here. And I felt horrible. And it was really that moment when I realized I can't do this anymore. So I took paternity leave and told my wife, if I can start a consulting company and switch sides and start helping physicians, I'm going to do it. And if I can't, I'll go back so I can pay the mortgage. So that's how the company got started. That was 20 years ago this coming June. That little baby boy is now a freshman in college. And it's been a great 20 years working with and for doctors rather than against them.
Ron, it sounds like we need to find more insurance executives, have more babies.
And have their physicians really explain what's going on. Yeah.
Exactly right. That's a good way to get going. I like that formula for change.
Ron, do you have a specific experience from the early days of your career while you were working in the insurance industry that shaped your perspective on the economic challenges today?
Early on in the payer side, we were constantly looking at driving down healthcare costs, which in and of itself isn't a bad thing if you do it the right way. Unfortunately, a lot of what we were doing is what I thought was sort of the wrong way to do it, was to just sort of drive down price or, hurt physicians, et cetera, rather than looking for more efficiency or higher quality. I will tell you that one experience that stuck out, this was towards the end of my career at Cigna, that really hit me that, boy, this is the wrong way to do this, is I was in a national meeting, and Mark Bertolini, who now runs Aetna, was in the meeting. He was working for Cigna at the time. And he was explaining to us that he thought Cigna was a little too physician friendly, and that it was time to execute a few hostages. That he
Literally, those were the words he
Those
used?
were his words. Yeah, execute a few hostages. And so he told us to go back to our markets and terminate 10% of our physician network, which we could do without cause legally. And we told him, that was probably a little too much. And he eventually got down to about 1%. And I had to go back and terminate 150 out of my 15,000 physicians just because we were going to execute hostages. And I thought, this is just the wrong way to approach something as important as healthcare.
Wow. That feels that way. It feels that way when groups get kicked out for no good reason. They do everything they're supposed to. and then their contracts don't get renewed or they get reduced to half. Wow.
Yeah, the really scary part of that story is, I have a pretty sarcastic sense of humor.
Mhm.
And so in this process, I sort of said, well, if we're going to do this, we got to find the right doctors. I mean, let's find some doctors that have really sick patients, and maybe their patients will stay with their doctor and switch insurance companies. That'll help us. I mean, we got to the rheumatologists, man, their patients never get better. We got to get rid of those guys. And infectious disease. And I was trying to be sarcastic to the point of trying to point out that this is a bad idea. Instead, they took me seriously. They're like, hey, you're right. We need to really look at which specialties will get the best return on. And that, again, that was another chilling moment in that whole story of like, holy crap, this isn't where I want to be.
That is horrible.
Yeah.
Ron, I'm curious, fast forward to the last few years where terminating contracts has been a significant theme. The No Surprises Act definitely was a facilitator for the insurance companies to say, hey, we kind of rigged the system pretty well to say, let's terminate contracts and we could pay even less on the out-of-network side. What's your sense, of the more current events associated with insurers creating thinner networks, really targeting emergency physician groups that they've had decades of contractual friendly relations with, and similarly taking hostage and terminating those contracts?
Yeah, and what's really unfortunate about that is I truly believe that Congress had the right intention with the No Surprises Act. And while there's things that I would have changed, in and of itself, it's not a horrible law. It was meant to be a shield, to shield patients. And I don't know of any physician who disagrees with that. But unfortunately, it's turned into a sword for the payers. And that's the really bad part, is that they have taken what was a well-intended law to protect patients. And because of the lack of enforcement by the federal government on it, the way the law was written, they've turned it into a sword. And what payers are doing is terminating contracts, dropping reimbursement. One of my clients early on in the No Surprises Act, even before it was actually implemented, a few months before it became live, got basically a termination letter from United Healthcare and said either leave the network or take a 50% pay cut. And if you talk about emergency medicine, if they start taking revenue cuts, the only thing they have to do to sort of balance their books, to be able to maintain appropriate compensation levels, is to reduce staffing. And that means reduction in quality of care and the service that gets provided. And I don't think the community fully understands that.
What are some strategies that emergency physicians can use to fight back? How can we deal with these inappropriate actions of the payer?
I think there's several, and like anything else, there's different strategies for different situations. So you really got to look at the specific situation. Some of it is potential legal action. Some of it is public relations, if you will. Communicating with the community you serve. These are people that not too long ago in the middle of COVID, we were calling heroes. And let's remind society that when you needed us most, we were the ones that were there. And at the early stages of it, putting our health at risk and our life at risk. Some of it is trying to do legislative avenues, explaining to Congress that you've got to force the enforcement of this law to protect emergency medicine physicians, because if we do too much damage there, the next time there's the next COVID or whatever, we're really in trouble. We saw how much that system flexed to handle that influx. And boy, if we do too much damage there, they're not going to be there for us.
Physicians have said that publicly recently, that the flexibility, the capacity in the system no longer exists. And if we have another one, it could be very dangerous.
Yeah, I mean, I saw a statistic the other day, and it showed burnout rate by physician specialty. Okay. And I might get the number slightly wrong, but if you got like down to the 22nd specialty, as far as from highest burnout to lowest, the 22nd specialty still had a burnout rate over 40%. I mean, there's another, I saw a survey of physicians saying, would you recommend medicine to your child? And the vast majority of them said no. When we need them, they're not going to be there.
Ron, I'm curious, historically, the economics of emergency physicians arguably had another partner, the hospital itself, right? And sometimes the hospital was in a financial place to be able to subsidize the fact that the revenue couldn't be sufficient in a particular geographical area. How have you seen that changing, given the financial lower revenues at the hospital side, then makes it more challenging for them to be a partner of the physician economics?
One of the challenges with healthcare is its economic model. And I'm an economist, what we would call largely price inelastic. So a perfectly price elastic business is a gas station. Okay. When the Tanker truck rolls in. If the gas in that truck is more expensive, you turn a dial and the price at the pump goes up. You can adjust your price. Healthcare, whether it be hospitals or physicians, really can't do that because, first of all, call it roughly half of their money comes from the government, Medicare and Medicaid. Mm-hmm. And they're not only not increasing their rates, they're decreasing them. The other half come from these payer contracts that have locked in rates to them. You have to forcibly renegotiate. Some of them are locked in for multi-years. So hospitals now have felt the strain that everybody's felt. Nursing salaries going up, costs going up, supply costs. They've had massive inflation, but no ability to increase price. So the hospitals don't have the money to give to the ER docs either. It's one of the reasons why the ER docs should and could look at the payers and say, you need to fix this gap, especially when you see companies, and I'm just going to pick on them because I know the number, but there are other companies out there that have similar financials. When you see a company like United Healthcare driving $22 billion of profit, it's hard for me when they say, well, we really can't increase your reimbursement so that there's an emergency safety net there. That one's a bit hard to swallow.
It strikes, though, that there is a public policy issue. It's beyond just, can physicians get paid a certain amount, right? This is about making sure there are, in fact, well-staffed, right, with the right people, with the right credentials, with the right experience in emergency rooms, right? In the event tragedy happens, right? And that is a policy issue. It's not merely a business issue among an insurance company and a bunch of physicians.
Absolutely. It is absolutely a policy issue, and it's a public policy issue. And we shouldn't be surprised at the physician shortage because we haven't addressed that issue, that public policy issue. A while ago, I wrote a piece kind of, again, sarcastically and tongue-in-cheek about this high school student going to their guidance counselor saying, I want to figure out what I want to be. And high school student, straight A student, great test scores, really smart. Guidance counselor says, hey, I have this job for you and you would be great for it. And it's a physician. And the student says, really, well, what's it going to look like? When am I going to get out of college? Well, you got about 14 years of college in the Friday. Oh, okay. And you're going to graduate with massive debt. Okay, well, I'm going to make a lot of money after I graduate. No, actually not. It's kind of declining and the hours suck. And, and it's really a high stress. And the student goes, why would anybody do that? And the counselor says, I don't know. I've had 3 people turn me down this week.
Yeah.
But if that's what we're doing to the House of Medicine, and especially emergency, where the hours are hard and the stress is there, and how should we expect more kids to want to go into that, especially the best and brightest? And that, to me, gets to that public policy issue of there's a role in our government to protect that, and not enforcing the No Surprises Act is doing the opposite. They've got to call these payers into question about it.
Ron, I'm curious, you wrote an interesting book recently called Clear. You talk about healthcare reform. How do you see specifically the emergency medicine, both from the physician and the hospital side, needing to participate in that reform? Are they drivers to the reform? Or are they beneficiaries to the reform? How do you see that playing out?
Well, first of all, I don't think there's going to be successful healthcare reform unless you actively involve the House of Medicine in the reform. They're the ones who understand it. I'm a layperson. I've been working in healthcare for, 38 years. I can't do it by myself. You've got to get the hardcore clinicians to get there. And the good news is they want it as badly as anybody else. So when you think about emergency medicine, they've got to be at the table to how to fix this. How do we keep people from using that system when they really shouldn't and overloading it? Because it's an expensive primary care or urgent care arm. And a lot of people use it for that. How do we make sure there's clinical connectivity so that when somebody rolls in the ER, that doc knows everything that happened to them beforehand rather than guessing? How do we make sure that they're well staffed, especially in the rural parts of the country? How do we take advantage of technology so that when somebody rolls into a rural hospital, the stroke, there's a neurologist somewhere else who can evaluate them? The point is, they've got to be at the table and helping us design the reform, or else it's going to fail.
Ron, can patients participate in this healthcare reform equation? Where's their influence? What can they do to preserve their own ability to get good care?
Well, I think patients participate in a couple of ways. One, first of all, and this is, I think, not a criticism, but an understanding that has to happen in the House of Medicine. Medicine for so long has been so focused on the delivery of quality of care. We've made incredible advancements in that area that they really haven't spent as much time explaining to the community what they do, why they do, how they do it, and how you can benefit from it, how you should be participants to it. That sort of public relations that the payers do wonderfully. So one way the patients can participate in it is to understand that and to start to voice their concerns when it comes to electing officials. to say to somebody, look, if you're going to support another cut for Medicare reimbursement when the conversion factor is already less than it was 25 years ago, I'm not going to vote for you. We've got to support this so that those physicians are there when I get 65 and need it. Another thing is we've got to develop a system where the patients become active participants in their own health increase. Why is it that I can get a discount on my auto insurance for being a safe driver or not having tickets, but I can't get a discount on my health insurance for having weight loss programs or getting my cholesterol under control, et cetera? Why don't we have that same kind of thing to involve the patient in their health? We've got a real big problem in this country. So those are, I think, two ways that patients absolutely can be involved.
Ron, on the latter one, it sounds like there ought to be an alignment of interest, right? Insurers benefit directly from good, healthy behavior, if you will, whether it's diet, exercise, other that patients do, and they should want to motivate that because their costs should go down. Is that something you think the industry really has the novel ability to drive?
They do, but there's a problem there, okay? And one of the perverse incentives of healthcare insurance is that 5% of the US population consumes 50% of all the cost. And if I'm a health insurance, I don't want to attract those people, okay? And so, for example, let's take weight loss. I mean, this country has an obesity problem. That drives cardiac disease, it drives diabetes, et cetera. Huge cost, okay? Well, if I'm the only insurer that develops all these programs that says, hey, if you're obese and you're working on it with your doctor, I'll give you a discount, I'm going to attract too many of those people, which is also one of the reasons why so many insurance companies don't cover the new weight loss drugs, because I don't want to attract the obese people. So I don't want to be the place where they go, you know what? Boy, Blue Cross or Cigna really helps you with this problem. So there's this really perverse incentive that, yes, I do want them to get healthier, but I don't want to attract the people who have that issue. And those are things that, in healthcare reform have to be changed.
It's remarkable to me, you've known this for years and you've lectured on it, but that the insurance industry does not make money on healthy people. They make money off of sick people. In a sense, profit in the industry is driven by keeping people sick. That's an overstatement, but there is an economic incentive to not really solving the quality care issue, stringing patients along and then just not paying for it. That component worries me.
Well, yeah, it worries me too. It also worries me now that you've got insurance companies getting directly involved in the delivery of care, because now you've got some really weird scenarios. United Healthcare is the second largest employer of physicians in the country, only next to the federal government. They are the single largest owner of ambulatory surgery centers.
Right.
Okay, so now wait a minute. The health insurance, especially with self-funded, the insurance company doesn't care what the costs are because it's the employer's money, but they could pay their own physicians more and profit there and not look like insurance profit. I mean, you've got CVS and Aetna. So we're starting to get this where the insurance company is going, hey, I can take 2 bites out of that apple. I can take it one as the financer of healthcare. I can also get it as the deliverer of healthcare. And then what incentives or what controls are put in place when I'm going into an exam room and I have no idea that the physician there is actually owned by my insurance company? Now, who are they working for? And so that really concerns me in those bizarre incentives.
Ron, can you zoom in? You touched something really interesting. On the one hand, United may actually not be the insurer. They could be the administrator of a self-funded plan. Mm-hmm. And then they could be the employer of the physician, right? Sounds like an enormous conflict of interest.
Yeah, well, in most cases it would be. In most cases you would have that sort of problem, or at least not know what's theirs. So United is not the insurer for somewhere around 70 to 80% of their members are self-funded. And so the employer is actually paying the bill. United has no risk in that situation. They're going to make money regardless. But then if they're the employer of the physician, and as the employer of the physician, they can decide what the fee schedule of that physician is. They could decide that the group that they own needs more patients, so they terminate the other groups in that same specialty. And now as a patient, I don't have that choice. I'm going to who they want me to go to. And because they cut the paychecks, they can tell those physicians what to do and how to do it. So it creates a real concern for me. And the patient often never knows that doctor's owned by United and that their employer is paying the final bill and United has no risk on that.
Well, and do you see the conflict different in the context of United? They're a third-party administrator of a self-funded plan versus them being the actual liable party. Because in both cases, they still have the lever of payment amount, albeit it's not coming out of their pocket in one instance, they're able to adjust the cost of compensation to the physician.
Yeah, so and this will get a little bit into the weeds, but I'll try to keep from getting too far in the weeds. When they're fully insured, under the Affordable Care Act, there's the medical loss ratio requirement that they have to spend at least X% of every dollar in healthcare. So if they're making exorbitant profits, one way to fix that is just transfer the insurance profit into higher reimbursement for the physician. That will drive up your medical loss ratio, higher percentage being paid, but it's right pocket, left pocket stuff. So if I'm the insurance company and I'm having too few dollars going out for medical expense, the law says that I have to give a refund to my customers if I get it down to an 80% MLR. Well, I can fix that. I don't want to give a refund. I'll just give the money to the other part of my company, which are providers, ambulatory surgery centers, physicians. That MLR looks high, but it's all right pocket, left pocket. So, it's Optum makes money and United Insurance doesn't. It looks like Trend. So that creates a real problem for me. And it's a way around what Congress tried to do the Affordable Care Act. We want to make sure you spend at least X% of the dollars on the delivery of care.
So where is there any regulatory or legislative initiative to address this conflict between an insurer both being the insurer and being the employer of physicians and owners of ambulatory surgical centers and on and on?
I don't know that there is. And I think it's a combination. I personally think it's a combination of a couple of things. One, it starts to get pretty complex. And this is no disrespect to elected representatives. They've got to understand everything. They've got to know healthcare. They've got to try to figure out bank finance and oil and so how can they get that deep into the weeds? Secondly, I think it's a function of the insurance companies have a very powerful lobby. Whenever any of this stuff comes up, they say, well, if you do this, it's going to drive up the cost of healthcare and you'll get punished by your constituents. Insurance is already too expensive. So I don't know that there is any activity around that area.
It sounds like it ought to be ripe. I can't disagree with the fact that you're dealing with a very strong lobby with enormous representation in Washington, making it difficult. As well, the threat of, hey, premiums are going to go up if you don't let us do what we do is quite the threat.
Absolutely, especially in an inflationary period. No employer can afford that. And it's easier for them to throw that around and nobody asks them to prove it.
I think it would be interesting from an economics perspective to demonstrate the numbers behind the manipulative model that they're able to exercise from being on multiple sides of insurer, administrator, and provider.
I will tell you, it's a great gig to be on the payer side. Leaving the payer side was the worst financial move I've ever made in my life. I'm much happier. I probably would have been divorced or had a heart attack by now if I hadn't done it.
Yeah.
It's made me a better husband, father, friend, etc. But financially, it's great on that side. They got a good gig going and they're getting it from all ends.
Hey, but by the way, I took a quick look at Flatlining, the other book that you wrote. In terms of the impact on the healthcare system, balanced with the economy, what kind of macroeconomic things ought to happen that would have a positive impact on healthcare?
Well, so Flatlining was really, if you will, that book was sort of the diagnosis. Clear is sort of my idea of the cure. And I wrote Flatlining because after watching the movie The Big Short about the housing crash of 2008-09. And what it hit me was healthcare is poised to potentially do that. And if healthcare does what the housing industry did, it's going to make the 2008-09 crash look like a minor cold because healthcare is so much larger. From a macroeconomic perspective, we spend $4 trillion a year on healthcare. If that were the gross domestic product of a country, our healthcare system would have a seat on the Security Council at the UN. I mean, basically, China, us, and Japan are the only countries that have a full GDP more than what we spend on healthcare. And we're going to pass Japan in about 2 or 3 years. It's huge. If we don't fix it from a macroeconomic perspective, it continues to inflate out of control. Eventually, the system breaks. There's some truisms in life. All bleeding stops eventually. All planes land eventually. And the trend of healthcare consuming a bigger and bigger part of our gross domestic product, that'll fix itself eventually. It's whether we do it or whether it does it to us.
Very cool. Thank you, Ron. Can you give us just a bit more on Clear, which is your more recent book?
Yeah, so Clear, after I wrote Flatlining, which everybody said, people would talk to me and say, well, that's great. You've told us what the problem is now. How do you fix it? And I thought, well, that's a much harder book to write. And I don't pretend to know all the fixes. Clear, I wrote to be the beginning of a conversation. First of all, the point of writing Clear is there isn't an easy fix. There's not one thing you can do. There's no magic bullet. We won't fix it by just getting rid of insurance companies. We won't fix it by doing Medicare for all. We won't fix it by just getting rid of big pharma. It's going to be a lot of things. It's going to have to be insurance reform. It's going to have to be changing how things get approved, whether they be drugs or new procedures, et cetera. It's going to have to be building in incentives for patients for a healthy lifestyle, not penalties, incentives. It's going to have to be taking a look at what happens with big pharma, how these drugs come out and how they're being able to be priced at such exorbitant rates and how we put free market into that. It's going to be changing how the government plays, how employers play. There's a dozen or so things that sort of all have to happen in order to, in my opinion, to start to bend that cost curve.
Emergency medicine is just a small piece of that healthcare dollar, probably 2%, 2.5%, 3% maybe.
On the professional side, less than that. On just the physician side, much less than that.
Physicians, What can emergency physicians do to impact the economics going forward?
Well, I think we need to engage emergency physicians more in the process and the decision making and the clinical piece of what they serve. Because while the payments to emergency physicians are a rounding error in the total healthcare cost, what they can spend and what those downstream costs are enormous. And we need to get them more involved in the actual decisions and process of that. Perfect example is, I don't understand why I can be in another country and put my ATM card into a bank and be able to get money. And I can't roll into an emergency room and have a card that has all of my medical information available. So what we're doing to these physicians is I'm rolling into that ER and they're going, boy, I don't know what he's had a scan. I don't know what drugs he's on. So I have to, if you will, almost overcare in order to try to figure out what's going on. In addition to that, some of that is really dangerous. If people are doing CAT scans in an ER because they don't know one's already been done, that's additional radiation. The ER docs all understand that, and they would be a wonderful group to get engaged in how do we fix that? How do we make sure there is a universal, bi-directional, completely interfaced clinical system? So when I roll in and plug that card and go, oh, well, Ron, I see that you had this, and I see you've had this problem. And I can communicate directly with the physician that's treating you so that when you roll out of the ER, they're going, hey, time to come over here and I can help you out. That'd be huge.
Sounds like a technology innovation a bit to drive that. That doesn't sound like rocket science, and it looks like it needs an initiative and a push to make it happen, but could have a meaningful impact on the quality of care and the cost of care. If you don't have to over care because of the lack of knowledge, you're in a much better position.
Right. Absolutely.
Well, Ron, thank you very much. Appreciate you spending the time. This was great. Continued success both with your consulting business, but we're the beneficiaries of your writing. So we appreciate your not so easy to put pen to paper on very, very difficult, complicated issues. So well done there.
Well, thank you. I enjoyed the conversation. Really appreciate what you guys are doing.
And appreciate your work too, Ron. Thanks.
Thank you for listening to The Strain. Please subscribe and listen to The Strain wherever you get your podcasts. The Strain is sponsored by Alaya Group, financing healthcare litigation.